Hi, good evening, everyone. Welcome back to the channel. So, in this one, we once again have a very entertaining topic that I'm sure is going to go viral, talking about taxes again. So, it's an important subject where, this probably won't be very widely received. It's important to understand taxes, and I've realized a lot of people that invest don't fully understand taxes, and a lot of times it's not talked about because people just say, "Oh, consult your tax advisor," as though you have a quote unquote tax advisor on speed dial. It's like as though every single person has this type of person on speed dial, which I find ridiculous. But a lot of financial professionals don't want to talk about taxes at all. But on here, we're going to be different. Of course, we're going to emphasize the importance of it, and we're going to actually cover it because it's a very key area of your finances. And being tax efficient, minimizing your taxes, is a very important strategy. So let's go right into it. What I want to discuss, because obviously, I just filed on the day of, and I want to discuss how return of capital works again, and how much it shaves off of your actual taxable dividends and things like that. And I want to go over the concept of marginal tax rates because I've realized a lot of people I talk to just don't understand, like I say, how taxes work and the fact that the tax system is very marginal. So if you make 50,000, you're taxed at this rate, but say from 50 to 100,000, you're taxed at this rate, 100 to 150, and so on, you're taxed at this rate. So while your average tax rate may come out to say 15% or so, your highest bracket that you might be in might actually be 28% depending on your highest level of income. So say every dollar over a certain threshold, say every dollar over 50,000 is taxed at this rate, and say if you get to 100,000, every dollar is taxed at this rate. And say you happen to get over 200,000 and every dollar is taxed at an even higher rate. So we're going to go into all of that in this one, but what I want to show you all, because of the way that these dividend funds, the way that they categorize the dividends, the way that they characterize return of capital, it actually gives us, believe it or not, a huge, huge tax break. So I'm going to pull up, which I don't show very often, but I'm actually going to pull up my own tax documents from my broker. So whereas, like I show you all in my Schwab account, um, it tells me between my Roth IRA and my traditional IRA, it tells me I made 64,000 in dividends last year. But did I have to pay tax on that whole amount? No, because first of all, um, almost half of it is, or not quite half, but like over a third of it is in the Roth IRA. Um, so with that, of course, as we know, that's not taxable. It's only the brokerage portion that actually is taxable. So of this amount, let me just jump over here real quick. For 2024, of the 64,000, you may think, oh, wow, he had to pay, like, say, I don't know, 15, 20% on this. So you may think I paid like between 10 and say 15,000 on this, but that's not the case because a lot of this was not even taxable. Um, so if we look over here, if we just go like by account, this is combining them. So here we go right here. Of the 64,000, 44,000 of it was in the brokerage account. And so of the 44,000, what I want to cover over here, of the 44,000, a very small portion of it was actually taxable. So if you look at this tax form here, ordinary dividends, only 14,000 of it was actually taxable. The other 29,000 was classified as basically return of capital and so on. So it was only out of that money because of the way tax advantage accounts work, and because of the way that they assign return of capital to like the vast majority of high yield dividend income funds. Um, the vast majority of this, in fact, like two-thirds of it wasn't even taxable. So of the 64,000, only 14 actually was taxable, which is only, that's like not actually not even a quarter of it was taxable, which is amazing. So, but what happens is that that money, and I may even, to be fully transparent, I may even just show on the return, that money adds to, say, what you made at your job and from all your other streams of income. And then, that might be, say you have a six-figure job and you're getting dividends on top of it. That dividend income is coming on top of the money you made from working. So that may be in like a 28% bracket at that point. So the 14,000, say that's all taxed at like 28%, then that would be 4,000 in tax that you owe. Instead of, you might see this and think, oh, 64,000 in that same bracket, that would be 18,000. So that's a big, you see what I'm saying? That's a big like tax benefit. When you first look at this, you have some sticker shock. You say, wow, I might end up owing, when you see that huge number, you're like, I'm going to get busted, like 18,000, but you're actually owing 4,000 instead of 18,000, which is only a quarter of what you thought you might owe in this case. Um, so then you have that, but then, of course, capital gains, excuse me, capital gains are another story. I just want to make sure I don't share too much here. I'll show you all. So capital gains are taxed. If it's long term, it's taxed at 15%. If it's short term, it's taxed as ordinary income. For me, I happen to have a lot of short term capital gains last year, so I did kind of get busted on those. So let's go over here and I'll see what I can actually share with you all. I did a lot of options trades last year, which were all taxable, of course. Some of my dumb trades actually gave me a tax benefit, though, which is fun. Sometimes when a dumb move can give you some kind of a benefit. Let's see here. So my short term, I'm just going to do this here. Um, let's, excuse me. Let me share this screen. While you all are quiet tonight, you all must be mesmerized by tonight's class. So if the cat doesn't have your tongue, let me know if you have any comments. Okay, so this is my short-term capital gains. It was $20,000. This pretty much was taxed at ordinary income. So this one, say it's like 28%. That this I owed like another $5,600 on this one. So I end up, after what I withhold from my job, I still end up owing on my tax return, which sucks, but it's still a lot less than what it's initially thought to be. And then let's do this one here. This was actually, I'm going to share this over here. This is my long-term gain. So long-term, let me do this here. Oh, look at, we lost three of you. Um, so long-term was a net of 6,000 and change. So this one was taxed at like the 15%. So I owed basically another 1,000 on that one. So basically I ended up probably owing quite a bit, actually. Um, and what drives me nuts is that the broker doesn't actually withhold for you. So I probably owed another 5,600 for what I showed you, another 940 here, and then another like 3,920. So I paid it all and all of that. And what can happen typically, and I do think one day they're going to change this. Um, what can happen is, because the broker doesn't withhold anything for you, you end up paying that. Then you get like a penalty for underpayment from the IRS, because for some stupid reason, that God knows why, um, if you owe more than like $1,000, they want to penalize you for failure to properly withhold, even though brokers don't automatically withhold. I think there's a way to maybe elect to withhold, like when you get dividend payments, but this is also, whereas you get a benefit from like I guess return of capital and all that. Um, this is also why dividend investing is somewhat tax inefficient, because these are all the portion that's taxed as ordinary income is taxed just as that ordinary income, um, which you end up with not what I call a not so ordinary tax bill, if you're in like a higher bracket. So that's that. Now what I want to go over, let's see if I showed you all the nuggets of wisdom I have for that one. Um, oh, here's what we can do. Actually, I wish it didn't show, or I wish I could just blur certain things out. Here we go. I'll show you all some of the dividends. Some of these are almost like 100% return of capital, which is, I guess, like some of you say, it's like they're just giving you your money back. Let me share this one again really quick. Okay, so this page here, I'm definitely in some funds that if I had it all to do over, I wouldn't be in again. Um, so if you look here, you see where it says corrected. Like this Defiance fund, this was what was paid. There was an adjustment made on the corrected form, which, by the way, doesn't come in until March 7th. So you only actually have like maybe 5 weeks to file once these forms actually come in. And there's really no alert that they've come in. So you just have to say, and, if you're busy traveling and stuff like I was, you just have to, you end up basically filing at the last minute. But anyway, as you see here for this line item here of $1,172, only like 360 was like adjusted. And in this case here, like for Tesla, it was all basically classified as a return of capital. So as you see here, of this 42,000 in non-qualified dividends, 29,000 of it was classified as return of capital. So that's a huge, huge tax break, which means on this page here, of course, it was a little bit more, but only 13,000 was actually taxable in this case. Now, what I want to do is what everybody should do: just go and do like a basic tax calculator. I think I still have it up actually. Well, typically I always have it up, but in this case, sometimes tabs open and close. Um, oh, I hate TurboTax. What's the best? Let's see. I guess I'll do a little plug for H&R Block here. Let's see here. I don't know why it needs all this information. What a year it's been, right? Okay, here is this. We're just going to start with with W2 info. Welcome. We finally got a comment here. Um, So it's going to say W2, but this is just overall. I want you to focus on overall, and I want you to see how things move. So, okay, if we say 50,000 of income, basically say like average income, say we live in a state with no income tax, just to keep things simple, which in my case, I live in a no state income tax state, and I wouldn't have it any other way, honestly. Um, okay, so we're gonna say no federal tax withheld for purposes of this exercise. Um, just so we can see what it would be. Okay, so on $50,000, this is not bad because you have, if you're a single person, you have a standard deduction of like 14,000. If you're married, that standard deduction goes up to like 30,000 or so. Let me look at my tax form here that I did for, let's see. Okay, so it's actually 32. This is kind of crazy. So it's 32,000 for married couples. Um, which if you divide it by 2, it's like 16,000 for the individual, but the individual one's actually less. So nonetheless, um, your first, basically, if you're a single individual, your first like 14,000 or so is tax exempt. So this $4,000 off of 50,000, this is actually an effective 8% tax rate, which percentage wise, it's kind of like tipping, but on a much larger scale. Percentage wise, it doesn't seem that bad, but when you see the dollar amount, it's like, whoa, $4,000 is a lot of money. But percentage wise, it's less than 10% of what you made if you made $50,000. Now, 50,000 minus that standard deduction is 36,000. So 4,016 divided by 36,000 is actually an 11% tax rate. Now watch how things move here. Now if you get to the higher tax brackets, oh, we don't want to do that. If you get to, oh shoot, if you want to get to the, oh, really? If you want to get to the higher tax brackets, which most of us do, um, you're of course going to pay more income tax. Okay, so for this exercise, if we go from 50,000, which we just went over, which showed us a $4,000 tax rate, if we go from 50 to 100,000, so we double our income, For purposes of this exercise, we're going to say no money withheld. Okay, so here, now you owe on that second batch of money, that other $50,000, you owed um, almost $10,000. So 13,841. This is easy math, right? What's the effective tax rate, class? 13.84%. That's super easy because $100,000, it's a perfect like round number. On it's like a basis of 100. So percent, as you know, percent per 100, basically. Very easy to calculate the percentage here without having to use a calculator. So that's an effective 14% tax rate. Um, But you'll notice 13,841 minus the 4,016 that we owed on the first 50,000. That's another 9,825 on the second 50,000. So that $50,000 was taxed at a 19.6% tax rate. So the first batch, effectively after standard deduction and all that, whereas that one was taxed at 8%, the second batch was taxed at an almost 20% rate. So now what we're going to do is for the example, we're going to add another 50,000. Say we got another promotion as we get, a little bit later in life here. Say our adjusted gross income was 150,000. So now we owe 25,539, which means this, and I hope this is really informative here, folks, because I'm giving you everything I know about taxes. So this money minus 13,841, this is now 11,698. So that next batch of $50,000 was now taxed at a 23.4% tax rate. So you see how it's going up, folks. So in this case, 25,539 divided by 150,000 is effectively a 17% tax rate, which again, percentage-wise is low, but dollar-wise, there's quite a bit of sticker shock, I would say. I would venture to say. Now, say we go up to 200,000. So for 200,000, and this is probably why the rich hate taxes, honestly, because I mean, I would hate having to fork this much money over. So now we are at 37,539. If we divide this by 200,000, that's an effectively 18.77% tax rate. Now, if we take this 37,539 minus the 25 that we just had, that's another 12,000 on this next batch of 50,000. So now I guess we stayed flat for the time being because we're at about 24%. So we didn't actually go up on that one, but you see, we owed more money. It was 37 minus, yeah. So the tax rate stayed at about 24%. So you see, when you make close to 200,000, you're at an effective rate of like 18% or so. So that's how marginal income tax rates work. I hope that was very informative. That was basically a tax workshop, which not many YouTubers do because it is somewhat a dry and boring subject. But I hope that cleared a lot of things up. So thank you all for those of you that tuned in. Like, comment, and subscribe, and join Discord. And we will see you all in the next one. Take care. Good night. Bye.